Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Never assume an asset's done moving just because the rest of the market looks sleepy, ladies and gentlemen. Some of the biggest shifts in crypto happen quietly, and most people only see them after the fact. Today, we're breaking down what's shaping up to be one of the most interesting moments in the XRP ecosystem. There's a mix of new products, new investors, new liquidity sources, and real changes in how institutions look at digital assets, folks. When you put all of this together, you start seeing a bigger picture, one that hints at how global finance might evolve. So let's unpack everything, step by step, and look at what current data suggests about where XRP fits in this fast-changing environment. XRP has been getting attention lately for reasons far beyond price charts. The more eye-catching updates from Uphold, which released a debit card that gives XRP rewards whenever someone uses it. There are no credit checks. It's simple to sign up for, and it's appealing to people who already hold XRP and want an easy way to earn a bit back while spending normally. Products like this don't move markets by themselves, but they show how digital assets are slowly becoming part of everyday tools. A bigger wave hitting crypto right now is the rise of ETFs. Major firms like Bitwise, Franklin Templeton, Grayscale, and Canary have launched new products that are getting real attention from institutions, folks. Even during a slower market period, ETF activity has stayed surprisingly strong. Some analysts point out that XRP has held certain support ranges better than expected during those same dips. This doesn't guarantee anything, but it does show that assets behave differently from Bitcoin at times. And that leads to an important point. XRP doesn't always move in perfect sync with Bitcoin. It still reacts to overall market conditions, of course, but there are more moments now where it gets chart moves on its own. Many investors call this decoupling, and it usually happens when people look at an asset for what it actually does, not just how Bitcoin is doing that day. In traditional markets, this normal different stocks move differently. Crypto is slowly heading in that direction. Part of this shift comes from who is entering the market. More institutional desks are offering XRP futures and options. Higher liquidity tends to attract larger players who don't want to move the market with big orders. At the same time, private wealth events focused on digital assets have been selling out very quickly. This shows that business owners and high net worth individuals are asking more questions about crypto, folks, especially assets with clear use cases. And that brings us to something Ripple has done for years, allowing institutions to adopt their technology at their own pace. RippleNet doesn't force banks to use XRP right away. They can modernize their systems first and explore settlement options later. Because XRP transactions are fast and low cost, these features may matter more as banks move deeper into digital rails. A lot of this also ties into regulation, ladies and gentlemen. ETF approvals have been seen by many analysts as a sign that regulators want clearer structure in the market. And when rules become clearer, confidence usually grows. Some observers believe Ripple's cooperation with U.S. regulators could shape how the company interacts with government agencies in the future, although nothing official has been announced. Central banks, digital currencies, CBDCs are also a major part of this picture, folks. Most early CBDC programs focus on wholesale usage, meaning banks use the digital currency for settlement behind the scenes. Ripple reports suggest that 2026 could be an important year for more widespread testing of these systems. If more countries begin digitizing interbank settlement, they may need assets and networks that can move value quickly across borders. That's where neutral digital assets like XRP often enter the conversation. The global financial system is clearly changing. The U.S. is discussing new digital asset rules, ladies and gentlemen. Europe and Asia are running digital money pilots. China has the digital yuan, active in several regions. All of this continues. The world may need assets that aren't tied to one government, that move instantly and offer high liquidity. XRP fits into that discussion because of how its networks is designed. The idea of freedom also comes up in these discussions, not in a dramatic way, but in a practical way. A neutral asset with no single point of control reduces counterparty risk. Institutions like that, ladies and gentlemen. People like that. Even when the broader market facing selling pressure recently, some analysts believe digital assets may be forming a base. Historically, when selling slows and liquidity builds, markets sometimes find stability before new trends form. This doesn't guarantee anything, ladies and gentlemen, but it shows that the market is still active. Builders are still building. Liquidity providers are still participating. Some investors think XRP has been undervalued compared to assets like Bitcoin and Ethereum when looking strictly at utility metrics like speed, cost, and settlement design. That's an opinion and not a prediction. Here's the challenge. Most people still judge digital assets only by short-term price moves. When that happens, they miss the deeper forces shaping long-term adoption. Things like regulation, liquidity infrastructure, and global settlement systems get ignored. To understand where the ecosystem is headed, all the pieces need to be seen together. ETF growth shows that traditional finance wants regulated exposure. Institutional trading tools show demand for deeper liquidity. CBDC programs show governments want faster settlement. Products like the XRP Reward Debit Card show everyday use cases. Ripple's flexible model shows institutions don't have to jump in all at once, folks. They can modernize step by step. When you combine all of these parts, a larger picture forms, one where digital value moves across borders more efficiently, where institutions use a mix of stablecoins, CBDCs, and neutral assets, and where global liquidity isn't tied to one system. Right now, digital finance is entering a new phase, folks. Institutional tools are improving. Regulations becoming clearer. More investors are exploring beyond Bitcoin, and global systems are preparing for digital settlement. This doesn't promise anything, but it does show that the next few years may look very different from the last decade. XRP's role in the future may continue to be shaped by its utility, speed, neutrality, and growing ecosystem. Remember to turn on notifications and like, subscribe, and share comment on this video. The story of XRP today isn't about charts. It's about technology, regulation, global finance, and user interest are all moving at the same time. XRP sits inside bigger conversations about liquidity, settlement, and digital transformation. ETFs, institutional tools, CBDC programs, and global financial changes all play a role in shaping the environment around us and it. No one can say what will happen next, but the ecosystem continues to develop. Discussions around XRP are becoming more detailed and more informed. As we move towards 2026, financial systems worldwide are preparing for deeper digital integration. Always remember, ladies and gentlemen, this content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered, and this is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.